Our first panel discussion for today, which is on the topic export-import financing for SMEs. I invite our moderator, Ms. Gopika Gopakumar, Senior Assistant Editor, LiveMint, and our panelists, Mr. Sunil Kumar Sharma, General Manager and Zonal Head, Bank of Baroda, Shri Rudra Mishra, Assistant General Manager, SIDBI, Mr. N. Srinivasan, General Manager, Transaction Banking, IDBI Bank, and Ms. Shiba Chitanjan, DGM SME, SBI, LHO, Mumbai Metro. Kindly join us on the dais.
Good afternoon to all of you and welcome to this first panel. The reason I agreed to do this panel is because all the bankers are here. All the important stakeholders are here, and we can certainly make them all accountable to what is happening right now in the industry. So, of course, we have all been talking about MSMEs facing financing challenges, but what really is happening, we will get to know from them. So welcome all the panelists to this discussion, and we hope that we could address some of the issues and concerns that some of the MSMEs who are present here are having. As you all know, I was reading a report by Niti Aayog, and this was a data that they came out with in their report. The data is by IFC, SME Finance Forum, and World Bank. And they talk about the global numbers. They estimate that the entire MSME financing gap at $5 trillion. And trade finance, despite having very few asset quality issues, it stands at 1.5 trillion. You know, many reasons are there. One of it is that low awareness of financial products. That's key to, that's a hurdle to why MSMEs are not able to tap the export market. So let me first put this across to the largest bank, the People's Bank, State Bank of India. Ma'am, tell us, what are the different facilities that you have made available for MSMEs to help them tap the export market?
Good evening all. Actually, coming to this, I will start with my chairman sir's recent this thing, that we will, be focusing on cash flows, cash flow based financing. And as somebody was mentioning in the address note, TRED's business regarding trade receivable discounting. Based on that, we have started recently MSME Sahaj loan, which is, to include people in a small category. That means loan up to 1 lakh, based on invoice financing. It is something which you will get within 15 minutes, based on your GST returns and your, other KYC, and you should have a current account with us. So that is one kind of small thing which we have recently started. And other than that, we have got BRE. BRE is a business rule engine, wherein we are giving MSME loans up to 5 crore. It is a real-time online platform. It will capture from our income tax return and then GST returns and bank account statement. Accordingly, by around 20 to 25 minutes, loan will be granted. Similar kind of finance we are giving this is for export credits as well. And export credit, we do export packing credit in Indian rupee and also in packing credit finance for the foreign currencies. And then we do post-shipment kind of discounting, then export bill rediscounting. All the things, I think that is most of the banks will be doing. We are not a specialist, no special product we have in that regard.
So how much percentage of export-import financing is of your total MSME loan book? How much would this contribute?
Yeah, I am handling actually Mumbai Metro Circle, wherein we are covering 5 districts of Mumbai. So we have a portfolio of 800 crore in export credit itself, out of our 20,000 crore. So that is the portfolio which we are handling. Right. And altogether, if you see, our export portfolio should be around, market share is around 10 to 12%. That is what we understand.
Okay. Next, can I come to Sunil sir, Bank of Baroda. again, in your case, how much percentage of your book would be export-import financing? And do you really think that, and how are you assisting MSMEs in exports? And do you really think that the lack of awareness of financial products is the real reason for MSMEs not able to go ahead with exports?
See, addressing Gopika, the first part of your question, when you are asking about percentage of export finance in overall finance, see, that will not be a true reflection of whether they are properly or adequately funded or not, or export finance we are doing or not. The fact is, normal financing, it covers everything. So, including some project loans, some term loans and stuff, wherein typically the volume is higher. Whereas in export finance, what do you call it, is a working capital. A part of it which is either having an import leg or an export leg. So, overall pie, the share of this particular requirement is less. Hence, as a percentage, it will be less. It will always be less across all banks, all funding institutions, especially unless the funding institution is specialized export promotion funding like Exim Bank or something. So there, this percentage may be higher, but normal lenders, it will always be skewed in favor of non-export portion working capital. That's one. Coming to what kind of facilities.
Is there any particular reason for that?
Yeah, the volume. The overall share in the pie of this particular requirement. So overall funding requirement is big. Okay. Out of that, this particular requirement is relatively smaller. If you are doing a project finance, setting up factory unit, now that requires a good amount. So typically the outstanding, that's skewed in that favor. Coming to the next part of your question, what are the things we are doing for export financing? That's what you asked. So in different names, every commercial bank, I'll say, especially the ones who have overseas presence as well, SBI, Bank of Baroda, Bank of India, all those banks who are having, they have got the entire bouquet. So right from collecting bills facility, providing them exchange related support, or providing them pre-shipment credits, post-shipment credits, helping them raise buyer's credit, helping them raise even supplier's credit. There are certain banks which are giving upashalsi, like it will be usance and payment at side both at the same time. So this entire bouquet is available with almost all the lenders, including, of course, Bank of Baroda. We have now promoting one's institution. I think that's something which needs to be avoided, but then we got good presence, and the bouquet that we offer is kind of, it can meet requirements of any kind of requirement relating to export-import finance, is something which is available within the basket of offering that we have.
Right. So among the two, SBI and Bank of Baroda, you have the largest international presence. Do you think that you can grow, you think that, the amount of export-import financing that you said, it's relatively lower. There is a possibility to growing that book?
Now again, it is lower in comparison to the entire pie of lending. It is not low when it comes to the requirement of export-import financing. See, why, when Nilesh Bhai was saying availability of finance is not there, or your data also says there is a gap. Now, that gap is primarily because of the informal sector. The biggest gap that you will see is in the micro segment. Nilesh Bhai, you would agree. In small and medium, you have relatively better availability. If you do a comparison between the three categories, micro is somewhere you will have less. The reason is informal. Ubrak is the word cash sale. Now, majority, now after GST and thing, that's Sethi sir, the reason why he gave that statement yesterday, that with GST and with digital payments, we are kind of tapping all the digital footprints. One side, all your buyings and sellings are getting captured in by way of GST, wherever you are not evading that. So a lot of data points are available, so that formalization of even micro sector is increasing. Now, the more it increases, for a lender, it is like I need to know to whom I am giving how much. If I get that comfort, it's the business of banks to lend. There is no reason why banks would not lend. The question comes, how to get that comfort. So if we get the comfort, we lend.
Right. Coming to Srinivasan sir, you handle transaction banking. We have seen banks have gone through a lot of data has been digitized, a lot of processes have been digitized. So from that angle, do you think that things have become more easier when it comes to banks to assess the quality of MSMEs when it comes to financing? And what are the challenges that you face?
Good afternoon. Hello. Just as I said, probably digital banking has taken its own shape. We have a lot of data points is available, I agree. GST returns are automated. EDPMS is automated. Now the entire export-import database is available with the banker. We can even see what are the pendencies in EDPMS in online with other banks also. So we, at any point of time, we know what is the pendency and what is the level of compliance at the MSE sector or the particular corporate or the MSME firm. And what we can understand is only the major issue is that except export-import, the domestic sale doesn't happen in all, it doesn't happen in the entire digital format. Most, as Mr. Sharma ji said, or probably Madam said, 50%, 60% still happens in the cash sales format. We are able to capture the entire 100% if we enlarge the digital footprint. Definitely there will not be any probably challenge from the bank side to lend. Because we are here, as Sharma said, we are here to lend. We are sure, definitely only issue will be that we will be able to translate these numbers in a very readable form, in a very demonstrable form, that it is, we can convert into actual numbers for financing. That's a major constraint what bankers are facing is a challenge, that cash sales are whatever, the cash flows are not captured in the system. Probably still I understand despite the challenges, lot of, after this COVID, lot of good things have happened. Even I could see when I go to probably Dadar market, many of you will agree also, even the small vendors very much happy to get that payment through your UPI or this Google Pay, which I have not seen in the past. So definitely people are changing, things are going for a good direction, and I could sense a lot of MSMEs is going forward to make it more rational. They want to make it, as people sometimes say, want to make it white, not below the radar, above the radar only. Definitely they want to make it as clean as possible. They don't want any hassles, especially the younger generation. They don't want any hassles in the future to have an income tax notice or an enforcement direct notice. They are very happy to have a very clean slate in their book. That's what is expected of the banks as well as the regulators also. Once this is in place, definitely banks will be willing to lend. And one more good thing is that what I could sense is that in case of, especially in case of export-import, there are a lot of other avenues which are available, which will make them more comfortable taking the finance. People generally talk about the general traditional methods of financing like your post-shipment, pre-shipment, but there are a lot of other products like LCs, guarantees, or even collection bills where we can probably financing doesn't get reflected in your balance sheet. There are balance sheet item but doesn't get reflected. But people think that only which are available in balance sheet, we think it's the actual lending. Even a non-fund based product, when we give a LC, we also improve their MSMEs functioning to improve their exports. Or even we can, for a matter further, even a person who wants to get a equipment imported, we can give a guarantee that doesn't get involved in any financing per se, but it facilitates the importer to get a equipment at a much cheaper price or at a credit guarantee. It is technically a credit guarantee which bankers give. So what we perceive is that merely the fund-based products are the only source of finance. It may not be true. There are a lot of non-fund products which even MSMEs are also gaining. It is gaining popularity among the MSME sector. And I would say even when I could sense many times corporate, at least 2-3 people who have come with a micro, then became medium. Now they are a big corporate. I would say it's $1 billion company now. I'll share in due course of our discussion. They have started with a small. They have started with an import through buyer's credit. They don't know what is bias credit. Probably I am just trying to deviate from the subject. What is that? Just how to understand a product, that's what it depends upon the entrepreneur. How to utilize that product the best possible way with the limited resources. He could use that bias credit. He could reduce his cost. He was doing this churning in a very quite faster pace, and he could make his turnover at least 5 times within 2 years. That was the greatest advantage he had by using this non-fund product. That is one of the best things. What I'm saying, many people, MSC especially, may not be aware about the non-fund products. It is right time. Probably banks are also popularizing that. From IDBI Bank per se, but we are more aggressive in non-fund than fund-based. Because of a capital base, our name suggests we are industrial development bank, but probably we are more towards corporate in the initial phases. Now we are moving towards retail side. We are more aggressive on the retail front. And one more thing, what we want is not only that we are giving towards our importance for financing, we also give advisory services for overseas investment and also for FDI. These are the additional factors which probably MSMEs require to get their business in a bit higher scale. The missing middle is a major challenge today. From micro to medium to bigger, probably mid-corporate, it takes people are not able to get this finance or probably get their roadmap clear. This will probably the new methodology of enlarging the digital footprint and getting this non-fund based products or the FDI or even the ODI, probably you can see with the overseas direct investment has just tremendously improved. Even the individuals are investing abroad. They are keeping one of the MSMEs from the last week perhaps, they had acquired a firm in Germany. It is one of the best bearings company. It was a small firm. Now it is going towards a bigger economy. They are acquiring a company in Germany which is unheard of. And they are maintaining the products in such a way that they are able to maintain the standards at that level. So people are implementing that it's a misnomer that MSC's quality of products is not optimal. It is definitely there are good entrepreneurs in the market there who are able to match the international standards. And there for them, there is no constraint for financing. And you're not only from the traditional aspect, but also from non-traditional methods also we can finance.
Okay. So there is no lack of financing for good quality MSMEs. Let me come to the most specialized institution for MSMEs, SIDBI. How are you looking to bridge this funding gap from a SIDBI's perspective?
Thing is basically what extra products that we are providing. Many of when you talk about the export financing or the trade finance part, I think the mic is not on. When we talk about this export financing part, probably in our back of our mind, something what goes in is a bio credit, more like a packing credit or of a working capital facility. But a lot of things goes behind that. How the exporter actually required to produce something so that he can sell somewhere. And in this answer, actually, I'm going to answer your previous question also, where you said why the percentage is so low. So the percentage is so low because that is being funded through a term loan, that what we do. And maybe the packing credit and the buyer's credit that we don't do, but we do what other banks don't do.
Okay.
See, if you see the challenges for any MSME for exporting, it is basically they require certain things. One, the production is required, the capacity should be there. And the collateral is the limitation. We'll come to that if time permits. But there are certain things they require, certain handholding, certain technical assistance for understanding the nuances of the exporting to different markets. The paperwork requirement is there, some compliances are there, and they also understand the market also. Some with many times what we see, specifically the micro and the small MSME parts, what they do, they get an offer from any foreign country without assessing their actual risks involved in that. They try to jump into the order to fulfill that order, thinking that they will have an exporter tag or they will have maybe a little bit more margin. But they need to understand and they are required to have that assessment of risk. So for that capacity building, one is the capacity of capex capacity building. Other one is the capacity building of the entrepreneurs who can actually comply with all the nuances of the exports, as well as they can understand the risks involved in that. So we have products. In couple of years back, it was launched like Uber to Sitar. It was talk of the town along with SIDBI and Exim Bank launched that. So there is a component where the export champions actually they can get a component in the term loan facility where it can be utilized for a technical assistance, maybe for the training certification or maybe for availing or attending exhibitions in the foreign countries. So those facilities probably are more critical because many of the banks, they don't have that product, or many of the banks will slightly be hesitant to providing that product. Second part is when we avail a working capital facility, the constraint that comes is, apart from the collateral, is the margin money requirement, what we call the MMWC, margin money for working capital. That is required to be brought in through a long-term sources, either from the profits of the organization or from the promoters through their own sources through capital. And both the cases, there is a limitation. It cannot be unlimited. We provide also the for the exporting MSMEs. We also provide the MMWC requirement that becomes very crucial. It is more like, you can say, okay, bringing in 5 rupees, you can avail 20 rupees working capital from any bank. To avail that 20 rupees, you need to have that 5 rupees. It has an exponential effect on availing your working capital, your improving your sales and the exports. That things we are providing. And because term loans also go for production, maybe a machine, maybe a project, land, building, etc. Though they are domestic instruments only and used for domestic purpose and tagged like that only, but eventually they are also getting they are helping the MSME to export. So for your question, why the share is low, because they are tagged as domestic facilities, term loans. They don't actually tagged in the export facility. But there are so many exporters, they come to us for machines and the buildings. In any, sir was saying about 3 C's of the availing a credit. So the third C, the collateral, actually we are trying to eliminate that third C. 2 C should be enough. Your cash flow and your character. What has happened, if you see, collateral is limited for any exporter. If you are, and export market is unlimited opportunities are there, you need to produce that. And if you go to any traditional banking system, the collateral requirement is a must. I have got examples where Tesla came to Pune auto cluster requiring immediately some differential cases for, you can say, some auto components to be manufactured and exported to US so that for a test case basis, and they require certain specialized machines to be procured. The MSME, those who already they have mortgaged the properties for availing working capital and term loan facility, we have funded them without any additional mortgage or something. And the amount is good amount because the criticality of the machine was higher, the criticality of the component was higher, and in a very quick turnaround time. So there are practical examples are there. So those, we are funding building the capacity of the MSME in terms of its capex, as well as the entrepreneur for its soft skills, or we can say their capability to deliver the export products, as well as participating there in the export market. And also we are funding the MMWC, where they can avail that MMWC to avail the 4 times more working capital facility from any bank.
So what did you base this loan on? Was it against some guarantee that you received or cash flows, or you used some digital analytics to?
Actually, it can be a combination of, it happens with a combination of all the things. The cash flow based lending, we already started 2 years, 3 years back, and we also have got examples where loans are already getting sanctioned in 20 minutes, 30 minutes, and getting this documentation the same day or the next day and getting disbursed on the next day in a couple of days, 3 days time. So what happens as we grow, and the basic, and we always listen, MSMEs are deprived of the funds. When I don't know you, I cannot lend you. You want funding, you have to do the transactions digitally. You have a digital footprint, then somebody can assess you, know you, and fund you. If you don't come, you prefer to be below the radar, then you will always be below the radar. We have, along with CIBIL, we have generated one FIT rank. And also there are certain BREs, business rule engines are there, which assesses the ITR of the entity. The bank statements, they get analyzed. And the GST data. GST is the biggest booster in assessing the actual transactions of the MSME. And it has actually become a game changer in MSME funding. Earlier, there was only you relied upon the tally extract or the ledger extract of the MSME, where they can say this much of sales or purchases we have done. Now everything is digital with GST 3B, all those things getting filed. And after 20th of every month, you can actually see sitting at your desk how much sales and to whom the sales have been done. There are fintechs and the services providers are there who are giving the analytics to whom they are providing their compliance status. Based on their GST, their sales and other things status are there. Their robustness, they are providing that data. So capturing all those data, bureau data, and now bureau data, CIBIL, and any other bureau also, they have become so crucial. If you talk to any individual or any MSME, they're so critical about their own CIBIL scores. So that has become very, we can say, sacrosanct sort of thing. So CIBIL data, bank statement, ITR, and the GST, we analyze that on the digital node, and the BRE does the analysis, and we provide that. To avoid the collateral, we also offer a 100% financing model, where the margin, it can vary between 10% to higher depending upon the risk and the vintage, all those things factor. So their contribution is kept as a fixed deposit with SIDBI, which eventually is, and it's an interest-bearing fixed deposit, which is eventually handed back to the MSME at the time of, there are different stages are there. So we are eliminating that. And in certain cases, CGTMSE covers are also available. That's a guarantee. Now it is available for 5 crores credit facility. So that is there. But with CGTMSE, there is only catch. It is only available for the micro and small enterprises. Medium enterprises lose out in that. So in a combination of that, where CGTMSE is available and applicable, we apply that. Where it is not available, we talk about look for the different other models. But basically, the way to analyze one credit assessment or the Nazariya to look at a MSME has changed. It has now completely shifted towards in SIDBI towards the cash flow based their own transactions, and I'm sure the banks will also follow the path.
Sunil sir, do you also think there's a shift in the way banks look at MSMEs in terms of course, there's a lot of focus from the government also. What are some of the challenges that banks face or you face when it comes to export-import finance?
See, the challenge that Rudraji was talking about, they are not specific to export-import finance. It is overall. So how do I get a comfort that I do not need to rely upon something else? For example, in case is collateral. Now, tally extract or a GST verified data. If you compare these two things, there is no doubt that the latter is more dependable. So the challenge so far, pinpointing something is something which I don't want to do, but getting convinced by the requirement proposed and getting convinced by the logic being given that this is the way it will be done. There only the gap is, if at all the gap is, that's the only place where we end up looking at some gaps.
You mean lack of disclosure?
See, there is always a difference between how an entrepreneur looks at his or her business and how the lender will look at it. So one will look with optimism or a much higher optimism. The other will always have a view of skepticism. So we'll have always some doubts. That's the basic nature of these two communities, if you ask me. Bridging the gap between entrepreneurs' way of looking and how the lenders look at it is something which we need to find a balance and reach at some. Now, if I get a situation where I can rely on the data being provided by you, closed eyes, that much dependable if the data is, that gap decreases. So whatever you are trying to project, if your data is supporting, if your data is hidden, then I have a way to look at it. You are telling me to look at something else. So that is the gap which fortunately, as everybody has spoken till now, that gap is slowly but for sure that is decreasing. More and more people coming up, getting cleaner, getting on the digital mode, government bringing in more and more regulations, probably this gap will go away. And then that fine morning, I hope will not have any difference how an entrepreneur looks at it, his business, or how a banker looks at his business.
Can I pose the same question to Sheba ma'am? What are the challenges that you, as SBI, faces?
For any credit, the first challenge is the credit worthiness of the customer. We will find out the credit worthiness verifying various documents. That is the first challenge. And second one is we may see the experience of the customer, Export kar raha hai, to what is the experience he's having. And there are country risk, if you see, which country he's exporting and what are the current geopolitical scenario going on, based on which, you will analyze that. And there is also industry risk based on the product. Like sir was telling about Bangladesh, textile industry has, shifted to, some of the portion has shifted to India currently. So that kind of risk we observe when we are going through this export, which is not maybe that keen when we are doing in the interior, in domestic transactions. Only in the export cases we have to be very, outside the continent or outside the country. So this kind of risk is some specific risk which we feel.
Is there something like banks are comfortable lending to MSMEs who export to developed countries vis-a-vis the less developed countries? Is there some differentiation you make?
Actually, there is no such differentiation. It is that generally RBI gives us some sanctions. For example, we are not doing any transactions with North Korea. Or, Russia, we can do some transactions based on some approvals. And then Syria, we don't do any transactions. Like that, we have some restrictions. Otherwise, we don't have any, developed or underdeveloped or developing kind of no differentiation is there.
Right. Now, a lot of you wanted to share.
Adding to what Sheba ma'am said, one is UN sanction, what she is talking about. If the country itself is sanctioned, we will not be dealing as a country. So even I'll not be dealing as a bank. Both of us, we have got US presence. So we'll not be defying US sanctions, for sure. Probably the question that you ask is dealing with a counterpart in developed economy and dealing with counterpart in a developing economy, which is outside the sanction. So, example in case African countries. Yes, there is some sort of difference between the two. And primary reason for that, I'll say, is not the borrower. It is the economy of that country or its currency's value vis-a-vis dollar, because we typically convert everything into dollar. Now, if I deal with Nigeria, Naira has been fluctuating like anything. So, whether the exporter or my client should be dealing with those economy, we are running the same risk. Me and my borrower, they are both running the same risk. So, we have to take certain extra precautions when we are dealing with such economies where the dependence on the value of the currency or dependence on the economy of that country or stability of that government, these things we'll look at definitely. So if I'm dealing with a country having dealing in dollars, my currency risk is taken care. Or dependence on that currency risk, how much it will be. There is a future market, I can very well hedge. Premium is not that high, so it is relatively lower risk. There, where the risk is relatively higher, yes, there is some sort of apprehension over there. There is a difference.
Is there a push from bank side to get merchants to open Vostro accounts? Does that give you some sort of a comfort now?
Vostro is not the borrower will be opening. What we have been doing recently, and RBI has been pushing this internationalization of rupee, we want to reduce our dependence on dollar, or we want to internationalize INR. So for that, there is a big committee set up by RBI working full time. We as bank, what we are doing is we are encouraging we have got good presence, if you are aware, in African countries. So typically Bank of Baroda has gone all the places where Gujaratis have gone. So we have followed them. Entire East Africa, you will find Bank of Baroda, all places. So wherever we have overseas presence, we are encouraging, and weaker economies especially. So all the Tanzania and Kenya and Uganda, all those places, we have our presence. We are encouraging our bank branches to open Vostro account over here. Vostro is SVRA as they call it. It is meant to encourage overseas lenders open rupee account in India so that they settle their trade between the two countries in rupee. This is something which is helping actually, which is helping if the settlement is in rupee term, the currency fluctuation risk that the exporter is carrying reduces to a great extent. And as we speak, we have close to 16 odd SVRAs with us. That includes from non-Bank of Baroda entities as well. So there are certain economies where the banks are opening Vostro account in India. So as to facilitate the trade between the two countries. So that's a good development that is happening.
Srinivasan sir, do you want to add something to that? How that is helping?
Probably I'll just try to answer the first question. Probably you're talking about developing countries. One is that the countries which are being probably classified into various risk parameters. Some countries maybe some based on the risk parameters. Probably ECG also publishes quarterly or monthly basis. They publish what is the country risk rating. If the country risk rating is a probably restricted cover or a prohibited cover, probably banks don't try to lend because the possibility of getting the finance is very limited or remote. But most of the developing countries are not restricted. They are in a much better state. Most of the banks lend on to those countries. There's no issue at all. Second is there ECG. Once if the country is not in restricted cover, there's a ECG cover is available provided you have a hold on policy. So I don't think so. There's major any differentiation between development and as long as the country is not in the restricted cover. Right. Even if the restricted cover, he can go back to ECG or he can go back to the lender, get a specific waiver depending upon the credentials of the overseas party. That is one point from the point of view of the overseas importer. Second point is that how the country performs. Probably Egypt, the overseas importer may be good, but in the present case, Egypt was in a financial crisis. They didn't have dollars to pay. One of the few customers, even though the other party was willing to pay, they don't have an option to pay because the central bank has stopped giving dollars to them. So this is the reason why banks are reluctant in funding, where not the reason is not about developing a developed economy, where there is a financial crisis, a geopolitical crisis, or the country is not able to manage the resources. That is the first reason, probably one of the major reason I would say for not funding a developing economy for our exporter. This is one case. Second, the question what we are saying about internationalization. Internationalization always will not be for a developed economy. US may not be willing to open a Vostro account with us. It is generally mostly towards these restricted countries where they are not able to do a normal trade through dollars. These countries would prefer to open a Vostro account, especially as he said, probably African countries or who are in the developing economy, or probably the countries which are not able to take dollars, probably Russia. These countries are Iran. Probably we are one of the few banks who are handling Iran trade. Probably I was also in UCO Bank. Probably we have also stopped in the recent past. Otherwise, these are the mechanisms through which, where only countries which are not able to procure dollars, they will be interested in doing this rupee trade. But our country is trying to push this forward, as rightly said Mr. Shuliji. One is that to improve our strength of the rupee, to make our rupee more strong and steady. Third is that our customer will get the best of the exchange rate. There is not be any fluctuation in case of any developing where the exchange currency is fluctuating. These are 2-3 reasons I would say. Probably international rupee is one of the reasons why we are pushing ahead. And one last but not the least, we want to reduce our fiscal deficit as far as our balance of payment crisis. So as long we need to improve our finance.
One question I want, because this is such a buzzing theme now, a lot of SMEs are going for IPOs. I want to put this across to, sorry? Nilesh Bhai is left. So I want to put this across to Rudran sir. Rudra sir, how does that give you comfort, that additional equity coming in?
See, comfort is always some place in mind only. So there are enough. It is not that somebody is listed, it doesn't become NPA. What happens? The basic difference is as we are earlier discussing is the way we look at a business and the difference in the and the way the entrepreneur look at its business. So, and to bridge the gap, data was not there. Once it is IPO list, it's a listed company traded, the level of disclosure increases. Once the level of disclosure is higher, then I know you better. So since I know you better, my comforts are higher. With GST coming in, bank transactions happening, UPI, and account aggregator facilities now, it is there, and it will come to in full force maybe in 6 months, 1 year, or sooner, whatever the time frame is. So then disclosures are automatic. So then the comfort that now banks are having for a listed company, the same level of disclosure they will be having, or the same level of comfort they will be having for even an unlisted company also. So till then, yes, listed companies are more preferred. They are less leveraged. Their debt equity ratio, TOL by TNW, those ratios which are traditionally looked at are in place. So yes, they are more comfortable. Banks are more comfortable.
So I heard account aggregator. One word that I didn't hear in this panel discussion was fintech. So are banks sort of collaborating with fintechs for better?
Yes. Earlier, my last question I was talking about the GST data they are throwing. So when there is a BRE, there is a fintech. Whether how they are providing it is they are lending at the credit provider, or they are a solution provider, that is a separate thing. So many of our products like GST Sahay, where it's a invoicing, not discounting, invoicing financing model. So like that, there is a BRE, there is a SWIFT have different working capital schemes, they use BRE. There is one scheme, Express, where you get machine loans financed. They are based on BRE. So if there is a BRE, there is a fintech working behind that, capturing all bank transaction data, capturing all and analyzing ITR, capturing the GST. Everything is done through some fintech is the doing. And OPL, one of the largest online PSP loans, one of the largest fintechs of the country, is actually promoted by SIDBI and other banks. So fintechs are everywhere, may or may not be visible to the eye, but impactful.
So fintechs are visible. I mean, last week, if you all had been there at the Global FinTech Fest, I don't think we would ever say that fintechs are not available, and they are all hungry for finance. I think they are, and also very closely looking at the SME sector very, very closely to give finance. So I think that's one segment which will, of course, compete and collaborate with banks for this segment of pie. Any questions from the audience? This is a great opportunity. Don't let the bankers go. You've heard all of them. So if you have any questions, maybe we can take.
You talked about the Vostro accounts. Now, if we do the transactions in Indian rupee, with the like if we export in Indian rupee, we don't get the export incentives from the government. So it's like MEI schemes or road tape schemes which are there, we don't get. So I mean, I have had a very bad experience in that we exported something to Nepal, and the government gave the road tape that incentive. It was just merely 1.5 or 1.9%, and after 3 years they somebody started at because with Nepal, if you are doing the transaction, it is only for the US dollars and not for the Indian rupees. So then they sent us notice, and we had to pay with the interest and penalty to the government back. So basically the incentive which was, if it was not there, it should not have been given. Anyways, that's a different aspect of the government giving the incentive, but we don't get an incentive with the Vostro account. So what would be the advantage apart from just getting shielded from the USD or foreign currency fluctuation?
See, the Vostro that I spoke about is special rupee Vostro account, which is opened by lender overseas in India. So like as Bank of Baroda India, I'll open an account in US in for dollars. For me, it will be my Nostro account. For US, it will be a Vostro account. So Vostro account for us means, like for example, Saber Bank Russia. Opening a rupee account in India is a Vostro account here. So if they have to settle some trade of their client with you, they can settle it in rupee term, for which this Vostro account is used. I don't know whether the problem that you face will be taken care by Vostro. It is like payability. If there is a payability, rupee settlement can be done. If the question is on whether it's to be paid or not.
No, but so my basic question is, would we get an incentive with the Vostro accounts? Like, do you have any clarity on that? For the export related incentive, will we get with the Vostro account, because since the transaction is in Indian
that is one aspect of the scheme, that it's a kind of promoting the Vostro. So what I was in the RBI committee meeting the other day, wherein this issue was also there. So to promote, why should you be raising your invoice in rupee? There should be some reason for you, or some incentive for you at least to start. They are also asking if you can part raise in rupee, part in USD. That also they want to promote. So to bring more and more rupee invoicing, they need to give certain incentive. This incentive that you are talking about, maybe if that kind of incentive it is, yes, it should be helping.
You want to add anything, Sri?
We just want to add, this Nepal transaction doesn't come under SRV. Probably what we are doing is a mere invoicing in rupees, but the transaction doesn't happen through SRV mechanism. The SRV, through SRV mechanism, whatever benefits available to the exporters available under SRV.
Okay, and another question you mentioned about doing the transaction with a restricted country. Now, I mean, as an SME, we also get some opportunity, like some orders from the restricted countries like Iran or Sudan, but we are not able to do any transaction because there is a restriction, and we are not able to, because we won't get the BRCs if we export to, or we can't receive the payments from those countries. So can you guide us on how Like, do we have to sacrifice that business, or if you want to do the business, how would that transaction be?
Probably I'll try to make you understand what is the reason why banks are not hesitant in handling such transactions. All these Iran, Sudan, all of them are sanctioned entities. Probably you are invoicing in dollars, and all these dollar payments are routed through US correspondents. We are bound by US Patriot Act. All the banks are signatory to this US Patriot Act. So any bank which is handling a US nostro account, we are bound to honor this sanction terms. Sanction, this is whatever US sanctions are in place. Suppose in these cases, even though we may be willing to, as a bank, we may be willing to handle, as a correspondent bank, they may not be willing to help us in facilitating the transaction. So even though we send the documents, we will not be able to receive the payment in dollars. That is one of the reasons why we are not able to handle one. And sanctions is not the thing. RBI is not prohibiting any sanctions. It's not giving details of sanctions. It's only UN sanctions they talk about. US sanctions they don't talk about. But in case of restricted countries, there is every possibility. There is a possibility of default. You will not be able to recover the money, or you will be recovering to a third party, which is not allowed as per RBI guidelines. Probably you will be getting payment through Dubai. Then you will not get the PRC finally. Somehow you will get the payment, but PRC will not get generated.
So in short, we may have to sacrifice that business, basically.
But there are some cases, I would say, technically, if you are doing, if the SRBI mechanism is there, if they are not, the specific entities are not in sanction, and if it is as per that commodity which is exporting, probably medicine or humanitarian loans. For example, in Iran per se, the UCO Bank is handling only humanitarian goods, only medicine, food. These are the items which can be exported or imported from Iran. Though it is a sanctioned entity, there is a facility for exporting, importing through a rupee mechanism. Probably this is a special wastro for rupee payments to through Iran. It's probably the only bank which is handling is UCO Bank. We are also one of the banks which we have stopped due to various reasons. But unless there is a clear signal on sanctions, banks would be hesitant to handle this.
Okay, one last question we'll take, and then.
Sorry, it is not a question, but I just wanted to share my experience, whatever you people talked. I mean, we are into specialty chemical manufacturing business. And what we heard just now is, hey, you need to have a character, you need to have a clean and white business. And you need to respect what Neeraj Bhai said, that the bank is lending into a business of lending money. So they have to ensure that money is safe. And ultimately it is your money. Most of the times they are fixed deposit put by people like us. So two examples I'll give. One is IDBI, who's sitting here. In 18, we applied there for a term loan as well as a working capital. And the branch manager called us after 2 days, and he made us sit in front of the computer and dissected, is the right word, our balance sheet, and showed us how our financial ratios were skewed. I mean, the misunderstanding. I mean, it's not that the intentions were wrong, but we, as a partnership company, never realized that the salaries taken are withdrawal of the capital. And as a result of that, our capital was negative. So after that understanding, we infused the capital, and after they made us understand how to manage the finances, today we are a completely different company. I mean, we have grown after that maybe more than 100%. So that is one example I'll give you. So our ratios, our GST records or our income tax records, they ultimately decide our borrowing capabilities. And the second example was SIDBI. I mean, when we went last year to them for Bombay Chamber, and he told us that today SIDBI sitting on my desk, you give me your PAN number and I can have your entire history of transactions, everything. And that decides your borrowing capability. And after that, again, we applied to them for a term loan just last month. 2 days we got a sanction. Second day, I had a mail saying that your loan is sanctioned and 15 days disbursal. And what he talked about the collateral free loan is they deducted those 25% as a margin money and put us in the fixed deposit where we are getting the 7.5% interest. So there are ways and means if our intentions are clear, character is clear, and the bank will always support. Why will they not support? When they are in a business of lending and making money, why would they not? So that is how I said that let us be responsible, and they will be responsible for sure.
Okay, on that note, we'll wrap up this panel. Thanks to the fantastic panelists. Please give them a big round of applause for sharing. And thanks to all of you for taking part and being being here present as an audience. Thank you.
Thank you so much. I request you all to stay back, and I request Ms. Pinky Mehta and Mr. Rajan Raje to kindly come on stage and present the mementos. And also we have gift bags from Nike Solutions also, so please. Good session. Thanks for coming. Thanks a lot. Thank you so much, everyone.
One minute, we'll have one.
A group, Mr. Rajan Raje.
We'll have one. I think we can come in the front.